Hi, and welcome to another session of our course Product and Business Planning. Last time we stopped talking about the SWOT analysis, and the SWOT is very important to remember that there is a tool, a strategic tool we use not only in marketing but in management in general and strategic management when it comes to reflecting upon the impact of internal and external factors. Remember please that opportunities and threats are external factors which cannot be influenced by the companies, so they are coming from another tool which is called the PEST analysis, which is looking at political, economic, social, technological factors. And the strengths and weaknesses are coming from the internal analysis. And in the last video we did talk about the SWOT analysis for McDonald's. We did one for McDonald's. So in order to assess the strengths and weaknesses, you could also do a so-called strength and weaknesses analysis, which is something like a scoring model. You're familiar with scoring models, where you have on the, for example, on the left-hand side here, you have certain kind of criteria, such as price, quality, customer service, the friendliness of staff, for example, agility, whatever, and you score your performance against the performance of competitors. So, for example, here you see that is my corporation, and with respect to price, for example, we have a very, very good and strong value proposition compared to competitors, and competitors are not listed in this slide here, but could be, of course, if we try to do one here. Probably you may have something like that. I don't know, that's not very nice. But just to give you an indication, it is important to understand that with respect to this example, that, for example, with respect to price, we have a strength. Because a strength is only a strength if it is a strength compared to competitors, to the relevant competitors. If competitor has the same kind of price value proposition, for example here, it cannot be a strength. So only if in this illustration here, only if we have a positioning which is left to the ones of competitors, which is better, we can talk about strength. You can also do, like I said, a scoring model. You can also use a scoring model where you have a scale of 1 to 10, for example, or 1 to 5. And you may also add a weight to the criteria to assess your performance, so your strength, and also your weaknesses, to identify your weaknesses. Going back to the slide here, of course, if, for example, here, market share, you say, okay, this is, of course, a weakness because the competitor has a stronger market share, a better positioning than we do have. Or, for example, here, flexibility, obviously, that is a weakness because competitor scores higher. The question is always, how can you come out with a scoring? How does the scoring work? It works ideally not if the company is assessing that, because if you want to do a chart like that by your own, or a matrix like that on your own, you have this often you have this problem of this inside-out perspective, because you think, oh yeah, our quality is better than the one of competitors, but what is really relevant is not your point of view, your assessment, your evaluation, but it's the one of the customers. Therefore, it makes sense to have this evaluation coming from the customers. So to do a workshop with what we call focus groups. So with the key important customers, key opinion leaders, for example, to ask them and how far they consider your, for example, your personnel really being stronger than the stuff from the competitors. That is important to understand. Otherwise, we have this fallacy of having this inside-out perspective. That is not a comprehensive, but that is a kind of a checklist here to evaluate the market and the competitors. How large is the current and the future market for the product and the service offering? So what is extremely interesting is the future here, this one, and we call that, and we talked about that before, the market potential, the potential of this one here. Which market niche do you want? Or do you want a coverage of a more encompassing size of the market? Do you want to touch base on one segment of the market, for example, just the rugged phone market, or do you want to touch base on the entire smartphone market? So for old people, for young people, for whatever, and for all kinds of segments. Do you have a market, an industry-wide marketing or strategy approach, or do you want to target a specific niche in the market? That is a very paramount decision, because either way, you can be successful or you can fail, of course. If you look at, for example, I was using the example before. If you look at the Billabong, Quiksilver, O'Neill, they specialize in the swimwear, beachwear, surfer kind of outfittery. And if you look at Nike, they're more aiming at the industry-wide coverage of the market. So either strategy may be successful. If you have a brand specifically being in a certain kind of niche, you may be very believable in that niche. However, you have a downside, because if you are, for example, talking about Vans, the skateboard people. So just take the Vans example. What is difficult for them would be to do suits or to do swimwear, for example. That is it is possible, but then the brand is not so much believable more in these other segments. So this is what you have to take into consideration. Probably you have to use a brand or a positioning which can tackle more or tap into more market segments, or you concentrate on a certain kind of a niche. What benefit or solutions are the customers expecting? Yeah. So, and how far are you solving a problem of customers? By which criteria is the market segmented? Because, like we said over and over again in the different kind of examples, also when we looked at the Nike example, a market can be segmented applying age, sex, whatever, income, lifestyle, all kinds of criteria may be used to segment the market. So the question is, how are you segmenting the market? Giving the example again of the smartphone market, Doro makes specifically smartphones for all people, So they segment the market very, very simply, not looking at income, but just not looking at sex, just looking at age. But for example, 𝗬𝗂𝗋, the other example we were using, they were segmenting the market in a completely different way. It is about usage. It's about certain kind of jobs and professions. So they identified the rugged phone market, robust phone market, and they are world market leader in the segment for rugged phones. What market share are you hoping for in each market segment? So that is again a question of the strategic goals here. What are your potential customers? So who may eventually in the end, maybe also your customers you're not having on the agenda in the first place. An example is Becks Gold. I don't know whether we talked about Becks Gold, but Becks Gold was primarily done for women. Becks Beer said that women are of course potentially also target customers. However, more than 98% prior to the product launch of Becks Gold were male consumers. So they invented, so to say, a product, Becks Gold, to specifically address their potential customers being women. So do you already have reference or pilot customers that you can name? That is, of course, always what is coming in handy, not only when it comes to television shows like Shark Tank, but also if you talk to investors and say, okay, this is my idea, this is the value proposition, and we already kicked off with our website, and we sold already 150, whatever it is, or we have already 150 service contracts being set up, and we already got the first, I don't know, 50 positive reviews on Trustpilot or wherever, and we can show that. So that is, of course, taking a little bit away the uncertainty for investors when it comes to investing in your products or services. We talked about that before. Which main competitors offer a similar product? So do you have innovation which is really standing out, a new product nobody else has? Then of course you have a much stronger value proposition. What prices are competitors asking for if already in the market? What new develops are expected from competitors? How easy is it for competitors also to follow up with your product, to copy your product? How are competitors being organized? Which potential competitors could access your target market? That is a question that is also very important. Why is that important? Because that is a factor here being introduced by Michael Porter, the Harvard professor Michael Porter, when he was inventing the five forces of a market in an industry. And one force is the threat of substitutes. So how easy is it for competitors to enter a market and come out with a substitutional product to your own? And if it is, for example, very difficult to enter a market because you need a lot of IT infrastructure, for example, or you need a lot of capital expenditure, CapEx, then, and that is the terminology being used by Porter, the market entry barrier is very high. Market entry barrier, MEB. So it is a question. The market is more attractive, of course, if the market entry barriers are relatively high. That is also covered up in the next part here. Which market entry barriers exist already? And how long will competitive advantage last? That is also a critical question. That is a critical question. So what is unique about your offering? And even if it is unique, how easy is it, like I mentioned that before, for competitors to follow up on that? And still we are not done. And that is just a checklist here. You see a lot of questions, and very difficult questions, strategic questions have to be answered prior to that. Compare the strengths and weaknesses of your most important competitors against your own in the profile form. So whether you're using a scoring model or a chart like I was showing, doesn't make any difference. Then what is your advantage compared to competitors? Which distinctive features does your competition offer? Could be so that they're performing better in terms of quality, so as they are perceived by the customers. And which reactions do you expect from competitors? We mentioned that already. Now, we talked a lot about market segmentation because going back to the overview, every strategy process starts with a vision and mission of the corporation. So what is the purpose of the company? Then you're assessing the internal and external situation. So you're looking at the past analysis and you're doing a SWOT analysis. Then after you lay down your strategy, you need to look at the market and decide how you segment the market. So market segmentation, we talked a lot about market segmentation already, so it should be quite clear, is the process that companies use to divide, and that is the focus, a heterogeneous market, so a market which is different by the customers. for example, into small markets that are homogeneous. That are homogeneous inside, but externally they're heterogeneous. And the logic is, of course, then that you're tackling different segments of the market in a different way with a different kind of marketing mix. So you have different products, different prices, different channels you're using, and different communication with respect to the segment you're targeting. So first of all, you have to divide a market into homogeneous segments. Then you select the segments which you want to address, because most likely you cannot tap into every segment. So you have to look at different kind of segments, how they're doing. For example, if you're already in the segment, what is your market share? What are the market shares of competitors, etc.? All the questions we just raised, and you have to score the segments. So how profitable are they? How far are they growing in terms of market share? And then you select the segments you want to be in or you're already in. And then you have to define a specific marketing strategy for that particular segment. And the process looks like that. First of all, you have a disaggregated market. A disaggregated market is a heterogeneous market. So the characteristics of customers are diverse. So different customers are buying, for example, a smartwatch for different reasons. Some are, I don't know, whatever, are IT gurks who are happy when they have a nice tool to play with. Some of the people buying a smartwatch may want to track their heart rate and their health status and send it to their doctors. Some of the buyers may just use it for training. And some of them may just use it for making phone calls, whatever, etc., etc. So first we have a heterogeneous market. So you have all the different kind of segments here, and then you segment the market. So what you're doing actually is you group customers here with respect to certain kind of criteria. So you're having different kind of characteristics. So for example, here, this may be, I don't know, the segment of target customers, male and female, being aged 60 plus. These may be, so the second group here may be the people, I don't know, whatever, 30 to 60. And here the third one being the ones, I don't know, 18 to 30. It's 29 then, probably. And then you have the target market. So then you pick out the segments you want to target. For example, segment 3 is judged to be most attractive for whatever reason. So, and you say, okay, I only want to focus on that segment here. And just looking at the age, for example, or you can combine it also with income. And then you design a specific strategy for that. Like I just mentioned, these can be segmentation criteria. So you can segment the market with respect to demographics, which is age, gender, occupation is one, psychographic, personality characteristics, lifestyle, and behavior of customers. So special values, behavioral patterns, brand loyalty, and also geographic. You could also do that, right? Like, for example, a famous one is the Nielsen one. Nielsen. The Nielsen, the market research company, the Nielsen areas in Germany. So Nielsen was segmenting Germany into different kind of Nielsen areas. Customer segmentation when it comes to investment goods, that is a difference, because on the left hand side we have the B2C markets, and here we have the B2B markets. The B2B markets are the markets, for example, if companies such as 𝗪𝗪𝗪𝗪 is selling to Asklepios to hospitals, or if Intel as a manufacturer of microprocessors is selling to 𝗬𝗎𝗓𝗂. And here we have more the Nike, for example, selling to some kind of end user. So that is more the B2C. Okay. Oh, I was too quick now. Here, of course, same demographic, buying behavior, but it could also be a company-related one. For example, applied technologies, analog, digital, or situational factors, urgency, order size, for example. And so you can group, of course, a market here in small players or in big players, for example, always buying big numbers. So it depends. Okay, let's look a little bit at the marketing and sales, because that is a kind of a very, very important focus area. Not because I'm a marketing guy, but because marketing is, of course, essential when it comes to building sales for the product ultimately, but also first when it comes to designing a brand, looking at the customer, looking at the market. What is the market volume? What is the market potential? What is customer behavior like? So let's talk a little bit about marketing. How do you create a marketing concept? So all this, or I was pinpointing at that before. If you really want to start a business, there are some useful resources I also mentioned at the beginning of the course here. You have, for example, a handbook when it comes to business plan compilation. So how you set up a business plan. First of all, marketing goals. What do you want to achieve? I was talking about that before. So the planning of marketing goals begins with the business own goals and is achieved through the content of the goals. So it needs to be realistic, of generally economic objectives, which you can really quantify as well. So that is very important. In this respect, there's an acronym I'm always using. Goals always need to be SMART. So they need to be specific, measurable, ambitious, realistic, and they need to be time bound. So specific, measurable, ambitious, realistic, and time bound. Then you need to quantify the goal, because if it is not measurable, you cannot control whether you accomplished the goal. Duration, time interval for achieving the extent of the goal. So there are goals that, of course, are met in a shorter period amount of time, so operational goals, for example, or there may be strategic goals when it comes to, for example, becoming market leader in a segment, which may take longer time than just to have a sales goal of whatever, increasing sales by 10%. Then how can we achieve that? That is driven by the marketing strategy. So you have to define and determine the business segment strategy. Meaning you have to segment the market with respect to the segmentation criteria we just discussed. And there is no right and there is no wrong segmentation. So, and there are multiple ways, like I mentioned over and over again, to segment a market. Then you need to select the market segment you want to be in. And you have to also determine the competitive strategy. And that is also coming from Michael Porter in his famous book. Michael Porter was laying down 3 potential strategies which you can pursue with respect to competitors. One is cost leadership. If you pursue a cost leadership strategy, you try to generate comparative cost advantages over competitors. It does not mean to be that you're the cheapest in the market when it comes to the sales price, but you have a comparative cost advantage over competitors. For example, Toyota is always quoted as one of the cost leaders in the car manufacturing segment. They're not building the cheapest cars. This is Tada. The Tada Nano is the least expensive car on the planet. So that is a cost leadership strategy. A differentiation strategy, on the other hand side, is if you want to be different by, for example, by the value proposition you're suggesting, by the quality, can also be by the design that is perceived to be extraordinary. For example, Apple is perceived as to have a superior design over some of their rivals. So that is a differentiation strategy. And finally, you can also pursue a cost leadership and or differentiation strategy in a niche, and therefore it's called the niche strategy. So it can be what we call here, what Michael Porter calls focus differentiation, or differentiation focus, or cost focus. For example, so cost leadership aimed at multiple market segments would be Aldi. That is a good example, or Lidl. Differentiation strategy would be, for example, Apple, or would be Bang & Olufsen, for example, in the hi-fi segment. Now, niche is now an interesting question. Focus differentiation, what could this be? So that is a company being just focusing on a specific niche of the market. A good example coming from the hi-fi is Bose. Bose is a good example because why is Bose not pursuing, I don't know, a strategy such as Panasonic or such as Sony? Sony is aiming at the entire market, basically, at multiple market segments. So it's industry-wide. Bose is focusing primarily on loudspeakers and audio systems, but they're not really focusing or concentrating or doing other stuff like such as DVD recorders or television sets, etc. So Bose is a good example. If we look at the last one, which is the cost focus, that could be some internet brokers, for example, in the finance business. So Consors is one, so it's an internet brokerage company. Why is it not a cost leadership? Why is it not a cost leadership? Because it is not aiming at the entire market. So a company such as Commerzbank or Deutsche Bank, they're aiming at selling you all kinds of financial services, such as shares or an account or insurances, etc. So they're pursuing, when it comes to finance, they're tapping into multiple segments. So it's kind of an industry-wide strategy, whereas Consors is only focusing, or was primarily focusing, on the stock market. And in this one, they're having a cost advantage over Deutsche Bank because it is solely an internet brokerage. Now that was Porter explained in 10 minutes. And then what do we need to do? This is the question of operations. Operations. That is more the operational aspect here. This is all the strategy. So it's more long term, and this the marketing mix is more the strategy. So for each of the segments, you need to decide upon the product you're offering or the service you're offering, the price you are having for the product, and also you need to decide. And that is not so easy because the price here you don't just determine the price once, but you need to decide, oh, am I charging the same kind of price with respect to all customers? So for example, are you charging, if you're a company such as Netflix, do you pursue price differentiation, meaning you are offering special prices and price packages for students, for example? Or are you having always the same kind of a pricing with no matter which customers you're looking at? Then placement is a decision how you're getting the products being listed, how you're getting the products being sold. Are you using online or offline? Are you using both? That is the question. And big one as well is promotion. So how are you communicating about your value, about your product, about your company, about your service, etc. How far are you using television commercials or radio or print or social media or some kind of internet forums or whatever? Yeah. That is laid down here in the marketing mix. Like I just mentioned, that is a little bit more broken up here. So we have here the product mix. That is all the decisions when it comes to the product. And the most important one probably is the brand. Of course, you need to think about the product quality. But the brand is so important. Why is the brand so important? Because the brand is likely to be one of the key differentiating factors that sets your brand and your company apart from other companies. A brand is a collection of perceptions in the hearts and minds of the customer. So with respect, for example, to education, we are here. This is a course from the Technical University of Lübeck, which is a fine university. However, when it comes to education, there are a few universities from a global perspective standing out, such as Harvard Business School, for example. Even though you may have professors the teaching at Harvard or INSEAD or IMD or whatever may not necessarily sui generis be better than teaching at University of Bremen, University of Kiel or whatever, or Sorbonne. It is a brand that is having a certain kind of association spectrum coming along with it. Harvard, Oxford, Cambridge, and so on and so forth. So in the end, although, for example, you can also illustrate it perfectly looking at watches. Although, for example, every watch tells you the time, the Rolex brand has a superior perception when it comes to customers all over the world compared to its rivals. So Rolex is a league of its own. Not making advertisement for Rolex, but there may be other brands and products being as robust as a Rolex, being as luxury as a Rolex, being as expensive as a Rolex. However, what counts in the end is the brand and how it is perceived. So we summarize, a brand is a collection of perceptions in the hearts and minds of the customers. You need to decide also upon services that go along with the product and the program itself. So program means how many different variants of a product do you have in the product line, and how many different kind of product lines do you have? I think we talked about that before. That is also a difficult question because simply speaking here, we have these are different kind of lines of businesses. This is a line of business. So product line, a line of business is not really, it's not the best word. Let's take it away. Better would be product line. No, it's not a line of business. It's product line. For example, it would be for Apple, it would be smartphones. And then you have all the different kind of smartphones you're having. The iPhone 12. What is still in the portfolio of the iPhone? I don't know. iPhone. What is still there? Are they still selling the iPhone 8 or 10 or whatever? 11, I think they're still selling. So this smartphone line. And then another product line would be the, what is that? For example, is the streaming now. Streaming, and then we have the Apple Watch, for example, the iWatch, and so on and so forth. So this is here. This one going down here is the product depth, and this the other one here is let's take a different color. This one here is the product width you need to reflect upon, and that is a tricky decision. We talk a little bit about that in a later stage as well. Now, pricing. I mentioned that before. You need to think about the price, but also about rebates, credits, discounts. Also, for example, when it comes to global marketing, when it comes to global countries. So you need, for example, a company such as Coca-Cola needs to decide whether it's selling Coca-Cola for different prices in India. So in countries, for example, where you have probably less affluent average customers than in the United States of America, or you're selling at the same kind of a high price, such as Starbucks. Starbucks is pursuing this kind of a strategy. So making Starbucks, for example, very, very expensive with respect to disposable income in countries such as China. Now, place mix. I mentioned that before. You need to think about the channels and the physical distribution as well. So the logistics. How are you getting the product or the raw materials from A to B? Then the promotion mix. I mentioned that. So you have to think about the advertisement for the product, promotions, public relations. So this is all the public relations. It's not product related. It's more encompassing. The goal is not to sell the product, but it is more to position the company as a whole towards all kind of stakeholders. And personal selling, for example, that is really the sales force communicating, going out, visiting customers, talking about products, talking about services. You see that just the marketing is very, very complex. Very complex, because even in the product, you just take out one aspect, just take out the branding, and you see that this is very, very complex. There are, I don't know, hundreds of thousands of books just being written about branding, how it works, or what does not work. So that is one piece of the business plan. It's marketing sales, and this is where we dive in a little bit into more depth next time. Okay, so I end the recording here. Thanks very much for your attention. Cheers and bye-bye.